Lords, my share. They are ranked 97 and 115 or something like that. Okay. They're a specialist distributor of building, plumbing, heat, and DIY goods. The group principally sells to local tradesmen, small to medium-sized plumbing. It's like, that kind of tradesman sort of thing. Travis Perkins or Wicks, something like that. Is Wicks retail or is it trades? Anyway, 48 pence. Target price of £1.06. Upside 120%. Don't focus on the reward, focus on the risk. Enterprise value 106 million. Oh, bit of debt there. That's market cap 78. Enterprise value, I should actually knock that out of the MicroCap League. 100 million. Operating profit 9.1. Debt 47 million. Cash 19. Operating cash flow 19. Free cash flow 10. So you could say with free cash flow, pretty much, or with operating cash flow, they could pay that off in a couple of years. But multicolored here. Growth is negligible, is okay. Value is okay. Momentum, no. Nil point. Total health, it's been ill. Efficiency, potential, yes. So these are results. Said it's up a bit. In this environment, it's hard work. So less people building, expensive, all that stuff. So I suppose impact. If you look at construction PMI figures, they've not been good for many months. So there's a knock-on effect, of course. Purchasing managers, but value, it's okay on the sales front. PE 46. That's because the margins are low. But EV/EBITDA is fine. Price free cash flow is fine. Like I said, net debt of 27 million. That's a little bit worrying. Gross gearing 93. So essentially, what that means is, they haven't. The debt is literally 93% of their equity. So a little bit worrying, but they can pay their current liabilities. Gross margins very low, 21. Operating 6. They were better over this side, 20. Pretty much 3. So they have taken a hit on the margin front. Return on capital there is quite good. Broker target of 1.6. Momentum dead in the water. No momentum. And if you see here, big top line, 450 million revenue, 465. They took my growth by 3%. Gross margins 20%. So, we're looking at 1% net margin here on a good day, 1.2 on a very good day. The value is good. I don't see the upside here. I just put it on a multiple of 0.2, which it's at pretty much. Maybe I go up to 1.3, 5 EBITDA, 10 PE, and I've got 18 to 20% upside. I think it'll rally though. It's taking a bit of a hit. Again, it's floated in the bull market, and it's risen up there, come all the way down. We're hitting lows here. Maybe that's the bottom, and it'll rally on sentiment. When interest rates come down. Of course, now look, companies have a bit of debt. Now interest rates are coming down. It's not as a worry so much now, the debt going up, because they can obviously, if you've got covenants and you're refinancing in a couple of years' time, interest rates can be lower, so it should be okay. So as long as companies can service that debt, it isn't now such a big worry. So if the company's growing and everything else is good, it's got a bit of debt, I wouldn't worry too much, because that debt, servicing that won't be as hard in a couple of years' time, unless they have to refinance this year or next year or maybe whatever. Okay. So ladies and gentlemen of the watch list jury, Lords, do you give them a prayer? Definitely not Lords. Dreadful results. No for Lords, Andrew. That's so. Was that Rob? Darren says Mike Ashley Fraser now owns 20% of both Boo and Assos. Yeah, the Shark Circles. Good Lord, no. Nice one, Harris. I like that. Yes. In fact, when we do this, Lord, no. Ed, if you can do that, if you give me a little play on words, it'd be very good. Graham, Lord, no. I thought I was very there. Lord, no. Too much debt. Mark, who's that? Graham. Darren, Lord, no. Simon, no. Travis P, probably much better. You're probably right there, Rob. Lordy, no way. iPhone rap. Ryan, no. Lords, nope. Not for me at this stage, says David. I like that name. Not for me at this stage. Okay. Yeah, I think there's better plays out there. I mean, I think it'll rally. Margins, debt, in an area that's reliant on the consumer a little bit, or the market. So in fact, the market improves, it'll be improved.